Hello traders, welcome back to my YouTube channel. Thank you so much for clicking. Kindly remember to subscribe, like and comment down below. Hello traders, so welcome to another YouTube video. If you're new here, once again I want to welcome you. So today we are going to be looking at the daily bias, and when it comes to daily bias, there's a lot going on in the internet concerning the daily bias. People are talking about it. Some even are making videos about how you don't need the daily bias, how you maybe strategies about no daily bias needed. And I'm seeing a lot of curiosity among traders where when it comes to videos that talk about no daily bias needed. And this is the thing: daily bias is essentially knowing the direction of the market in the next, let's say, 1 month. Knowing the direction of the market, maybe let's say in the next 2 to 3 weeks, in the next 3 months. Essentially, that's what the daily bias is. And if you're a day trader, please, unless you're a scalper, then this video is not for you. For scalpers, it's allowable that you do not need to know the daily bias for you to be trading profitably. But if you're a day trader, then you must know the daily bias. It's not optional. You must know the daily bias if you really want to be profitable and if you really want to choose those high probability setups. Because you don't want a scenario when you're trading just any setup that comes your way. You want to choose your setups. You want to enter only choice setup, because remember, you're investing money that you have earned, and it's not just capital that you're throwing away. So that's why I'm insisting that once you know the daily bias, you are now in a better position to choose very high probability setups that will really project you in your trading career. So let's begin. So the monthly chart in front of us is of the Euro USD. So the reason I'm in the monthly chart is just I want to show you that when we're talking about the daily bias, people really confuse the daily bias to mean that I want to know where the market is going today. I want to know where the market is going maybe on Wednesday. No, the daily bias begins, it's something bigger than that. It's essentially, for example, let's talk about this once we had this low created. So when we had this low created, this is the monthly chart. This is the month of September 2022. And then we had October 2022. Look at this. Look at November 2022. Let's assume for a moment you knew that from October 2022, the market will be going higher until we hit this objective. How? I mean, that is the dream of every trader. Look at how from October 2022, the market has been rallying. We only had 1 month that dropped. Of course, except from this month, which we are seeing that the market has already hit objective. So between this low and this high, the market was rallying. The only month that was bearish was February of 2023. So this is exactly what I'm talking about. If you knew that in this month of November, December, January, these are three months, 4, 5, 6. Out of 6 months, out of 1, 2, 3, 4, 5, 6, 7 months, only 1 month was dropping. So if you knew that this month's 6 months will be rallying, then essentially it means if you are trading on the Euro USD during the months of October 2022 up to April of 2023, it means any trade that you take contrary to going high, if you take a bearish setup, that is a low probability setup. Yes, you can be profitable. Yes, you can profit from it. But what I'm trying to instigate is it is a low probability setups in terms of the direction of where the market is headed. Because the monthly chart, the weekly chart, and the daily chart set the direction. That's where the market is headed in the next 6 months. So if you sell in such a move, yes, we saw that there was some selling. Maybe inside this candle there was some selling. But essentially what I'm trying to instigate, the entire month was rallying. So where are the best setups? Essentially, I'll say the best setups for buying. That's why I'm insisting that the daily bias is crucial, and I'll get to it in a minute, because you may be asking how is the monthly chart related to the daily bias and so on and so forth, but I'll get to that point in a minute. So from here we'll be dropping to the weekly chart so that we can see the relationship between all this movement, and maybe I can even outline whatever was going on here. So let's outline that there's an imbalance here that we had hit on the monthly chart. That's why we saw this reaction. So let's outline that imbalance. So I like to outline imbalance using a channel, so you can get rid of that. So that is our imbalance. So that is our imbalance on the monthly chart. So if we drag here, thank you, that's exactly what I was going for. So once we hit this objective, the market started rallying. So we'll see on the daily chart how we could have known the market, on the weekly chart also, how we could have known that the market is standing at this specific imbalance. And then this was our objective. So initially we had this objective, which was the order block, but eventually we took it out, and now we retraced and then came to that objective. So essentially, let's look at exactly how we could have known that this market was beginning to rally, and how we could have maintained our bias as bullish. And then now we can also see the month of May, which essentially I believe it's bearish, or has been bearish. So from there we'll see what the market is trying to do. So let's drop to the weekly chart. So on the weekly chart, essentially I've outlined the range of opportunity for this drop once we hit that objective, but we can also see the objectives. So even before that, how would we have known that the market was coming for this objective? So once we hit this objective, we want to look for a short-term break in structure, which is right there. So that is our break in structure on the weekly chart. So once this high was taken out aggressively like this, then you know that this market wants to seek buy side, and that buy side that was our potential draw on liquidity. So the draw on liquidity, or the range of opportunity, was essentially that until we hit that objective. 860 pips was the range of opportunity. So once we took out this high and we confirmed a break in structure, anything going lower is simply a buy. It's simply coming down so that it can continue higher. So you can see all these wicks. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, let's say up to 11. We only had 1, 2 bearish wicks after this confirmation. Only 2 out of 11. So you can see why I'm insisting that this thing called the bias, or the weekly or daily bias, is very crucial in your trading, because you do not want to be selling here. That's how you blow accounts. If you sell in a market that is going higher and you're a day trader, you'll simply blow your accounts, because, or you'll remain in a state of break even. But if you focus on the high probability scenario, which is going higher, only trade setups that are going higher. That's how you win in this market. So this is our range of opportunity, and then we had a retracement. We fell short of that objective, and then we retraced lower. Then we came to take out those highs as we entered into that objective. So the reason I'm outlining this period is because we already hit our objective and the market started sliding lower, but we also have an order block here, which was of interest this past few weeks. So this range of opportunity was from here. So we'll drop into the daily chart here now to even see clearer the same scenario that occurred here on the monthly chart and the weekly chart. We'll see it occurring here on the daily chart, where we'll have a break in structure, or rather short-term high being broken, but on this occasion we'll see a short-term low being broken to confirm that the market wants to continue lower after breaking structure to this objective. So let's drop to the daily chart now finally, so that I can show you clearly. So you can see it took out buy side here. So now, once the market rallied higher, so you can see the market was rallying from here. The range of opportunity was here. We hit that objective. But there's a lot of things going on the daily chart. So you might wonder where does... So essentially the daily bias, from the moment we confirmed, I think it was around here, from the moment we confirmed that we are going higher, anything now above this short-term high, after we broke it, so anything that comes below, you want to see it. For instance, this was an opportunity to buy. So you'll be looking for imbalances, order blocks. Another opportunity to buy was here. Within that framework now of going higher to this objective, on the daily chart, you just focus on anything that comes down is just to buy. So you focus your setups on buying. So this day you want to be a buyer. You want to be a buyer here. There's another imbalance somewhere. There's an order block here. So these are the places you want to be buying. And then eventually we fell short, and then we retraced back below. I think it came back to the order. Oh no, that's not the order block. I think this was the order block. There's an order block that this market rested there. It was also the weekly order block, so you can go check that out. And then from there you resume again. Once you break this structure here, you resume the daily bias to bullish until you hit that objective. So that's essentially it. But now, as an example, I'll outline this. So once we hit this objective, how do you know that now this market may turn and essentially switch your bias to bearish? So for me, I'll say we had some buy stops being taken. We had this key level being hit. We had another level of buy stops being taken here. Now, the moment we start dropping, the moment we take out this low, why this low? Because this is the low that the market rallied to take out this buy stop. So there's no other buy stop that was taken above this high. So this was the low that took out buy stops. So the moment we take it out here, with a clear indication that it has taken it out with bodies closing below them, that is when you switch your bias to bearish. Otherwise, you are still buying and buying and buying until we take out this low. Clearly take it out, just like so. I don't like this because this could end up being a stop run. So I like this because this is a clear indication. Bodies are closing below the low. Now, anything being left here now that the market may want to retrace back into, that is a selling opportunity. That's why I've indicated here. So ignore this for a moment. I'll come back to that. Anything below here is a selling opportunity. So it came back to this imbalance. That's a selling opportunity. That's number one. And then it continued lower. Left order blocks here. That's a selling opportunity number two. These are very high probability setups I'm outlining. And then we have another imbalance here. It came back up. That's another selling opportunity. So as you can see, we've already outlined 3 opportunities to sell into that market as it heads toward this objective. So this was our first objective on this drop below. So you just go with the objective, the nearest objective. That's how you do it. Don't over target or overdo it. And then this example here, before we talk about this, we could have gotten an early setup here because we had this order block which was retested here. So it was just something that we could have been watching since we already hit the objective. And then when we slide lower, that's an opportunity to sell into that market. Now, these are 3 opportunities in a period of, let's say, a month. You could be asking why, or maybe 4 at most. So those are high probability setups. 4 high probability setups within the month could turn around your account. You are not over trading, and it also helps you not to over trade because you're focusing on high probability scenarios only. But now we can now even further get more opportunities if we drop into the 4-hour chart. So we'll do just that. When we drop into the 4-hour chart, as you can see within that month, this is just the month of May, we are getting 1, 2, 3, 4 more opportunities. So those are 8 high probability scenarios. So the reason I'm outlining these examples is because we're already below that breaking structure. So anything below it it's a high probability scenario because we are selling and you're focusing on selling only. So this is an imbalance on the 4-hour chart. So apart from this imbalance on the daily chart, we had another block here which was retested, dropped, imbalance being left, dropped, another imbalance, dropped, and then just like that you follow that pattern, and then we have another block until we hit this objective. So once we hit it, there's a high chance that the market may turn, but it's not always. If it doesn't want to turn, it will just clearly show you and it will drop way below the target to go for another target, so you can outline another target after that. That's why when we hit the objective, that's when you stop right there. You do not want to just keep selling just because it's bearish. Once we hit the objective, stop and wait for more information. If it shows you it wants to continue lower, then continue the bias, but always anticipate that there's a potential it might turn. So that is why I'm insisting that the daily bias is very crucial. So as I've outlined, you start from the monthly chart, and then you come to the weekly chart for direction, the daily chart for direction again, and the daily bias will give you high probability scenarios, and you can also drop to the 4-hour chart to get even more opportunities. So that is it about this video. I'll see you in the next one. So I hope this was very insightful. I hope it is useful in your trading, and I'll see you in the next one. Thank you so much for watching. Thank you guys. Thank you so much guys for watching. I hope this video has been helpful. If you enjoyed this video, don't forget to like, subscribe and comment. Also let me know what kind of content you want to see or any suggestions you have. Thank you.